Good morning from London. I'm Anna Edwards alongside Guy Johnson and Chrissy Gupta. We're an hour away from the opening trade. Here's what you need to know. The US dollar and Treasury bonds under pressure as billionaire hedge fund boss Steve Cohen says the odds of a US recession now stand at 45%. We will get Jamie Dimon's take in our exclusive interview with the JPMorgan CEO later today. Meanwhile, the trade truce-driven equity rally takes a breather with US and European equity futures following Asian indices into the red. Plus, Putin's snub. Russia's president names low-level officials for today's Ukraine peace talks with no indication Putin himself plans to join.
In the meantime, a quick check on these markets here. You're starting to see a little bit of reprieve when it comes to Euro Stoxx 50 futures, down about 0.3%. But I'd argue all the action may just be elsewhere. 10-year yield that's now crossed the 4.5%. We're going to dive into the dynamics behind that. And, of course, the fact that you are seeing this yield move higher while the dollar continues to weaken. Keep one eye on Brent crude as well, though. We are starting to see reports, mixed media reports, about a potential thawing when it comes to that nuclear deal between the United States and Iran. It moved the market yesterday. Will it continue to do so this morning? The countdown to the opening trade starts right now.
Thursday morning, good morning. I have so many questions about what is happening in the bond market right now. I'm not entirely sure what message the bond market is trying to send, particularly in the United States. The front end, the back end, inflation, all those kinds of other good things that we need to be discussing. We'll come on to that a little bit later because in the meantime, we have some UK data that is dropping. GDP data coming through a little better than anticipated.
I can answer none of your questions about the bond market.
I'm not sure I can either.
But I can tell you that the month of March saw higher than expected growth in the UK, up by 0.2%, and the expectation had been for that number to be entirely flat. So there you are. There's one question we can answer this morning. What does that mean for the first quarter as a whole? That means it came in a little higher than anticipated, 0.7% for the first quarter, as against an expectation of 0.6%. But some of this, for the first quarter at least, certainly in the February numbers, this was pulled forward demand. Certainly Bloomberg Economics talking about manufacturing, such as it is in the UK, trying to get ahead of tariffs into the United States. And Bloomberg Economics has, until this point, expected a second quarter small contraction. So we'll see whether that expectation stands in the face of this slightly better than expected number. And the pound has recovered a little bit on the back of this, but it's still up just at session highs. So not a huge move, but up a fraction of a percent as a result. And the Bank of England is expected to still keep cutting interest rates, of course, this year, at least a couple of times. We'll see if they do it more.
The industrial production numbers and the manufacturing numbers a bit further down are quite weak and certainly weaker than anticipated. And I think also government spending looks like it was down a little bit more than maybe anticipated, certainly by the survey number. So that's also worth bearing in mind. Should we talk about the bond? I really want to talk about the bond. I really want to talk about the bond market and talk about what is happening here. So what is happening? You got a significantly higher yields in the United States, both at the front end and at the back end. The back end, I think, is really fascinating. What is it telling us? Is it telling us that we're worried about the deficit? We've got this huge, beautiful, big bill, whatever it is, going through Congress at the moment. Is that going to increase the deficit? It certainly looks like it's going to at the moment. Is that a problem that the bond market is currently having? Is it worried about inflation? Now we've taken the growth risk out, are we worried about inflation? Is that what's being signalled, both at the front end and the back end? Because basically you're worried about longer-term inflation, but you've also got to kind of factor in the Fed into this story as well. Are foreigners buying? Are they not buying? Will they continue to buy? If they don't buy, will US investors buy? What kind of yield are they going to be demanding going forward? Is that being factored into this thinking as well? And it all relates back as well to what is happening with the dollar, which has been weak. So like lots of really big things going on here. And can you have a stock market that continues to rally from here with yields at these kinds of levels?
Could all of these things be true, Chrissy? I was reading a piece yesterday that said 10 reasons, count them, 10 reasons why Treasury prices are falling on Wednesday. So there you go. If somebody found 10.
I'm sure there's more, to be completely honest. I mean, I'm having a little bit of deja vu here because you laid out this deficit story. I'm going to zero in on deficits simply because, one, we talk about it a lot here in Europe, but also because this particular set of issues that are moving the bond market and the dollar is something we saw in France a year ago in the summer of 2024, where we talked about this kind of deficit story. We talked about these kind of, yes, the politics were in there, but it was really a question about the deficit and whether a Le Pen presidency would come in or Le Pen kind of majority would come in and not be able to shrink that deficit problem. That's the exact problem that the GOP is having right now because they are shelling out subsidies on places that a lot of people didn't expect. Farming is a great example because at the end of the day, if you are worried about trade deals with the rest of the world, the farmers get hit. So the GOP trying to cover that as well. They're trying to talk about funding to the oil industry, even solar in there, taking out the wind piece, but the solar piece as well. So they're talking about funding parts of their base that a lot of people didn't see coming in this extent, which is where the narrative has really changed.
You've mentioned yields. We've talked about that. FX, you've got to mention as well. And just worth shining a light on that. Even though we haven't travelled all that far, over 24 hours on the dollar, there does seem to be this narrative, certainly across the Bloomberg terminal over the last 24 hours around, is the US administration protesting too much when it comes to the fact that, well, Besant and others saying, look, we're not talking about, oh, sorry, not Besant, that's not the source of our reporting, but the reporting quoting US officials saying FX is not weakness in the dollar is not part of these trade conversations, and Markets Live are having fun with that.
I genuinely laughed out loud when I saw that because it's the most logical thing you could possibly do. If you want to rebalance in the way that the Trump administration appears to want to, the dollar is the logical mechanism, the lever you pull to make that happen. And it seems, therefore, slightly at odds with the reality of the situation we find ourselves in front of us, that they are not, in some shape or form, thinking about a weaker dollar, despite the fact that they're protesting too much. So are we going to get a weaker dollar? What are the implications of a weaker dollar? We'll talk to Francisco Blanch a little bit later, because I've got some great guests lined up to talk about that. But I think it's going to be fascinating to see if that is the direction of trade. You've also got retail sales out a little bit later. I really want to talk about that. That's going to be interesting as well. Walmart's coming out. It all folds together into a giant mush this morning, which is kind of what is happening in the bond market.
We get to that bit of the mush later.
Absolutely. Let's add to the mush, if we can, here, and fold in the geopolitics, because we are awaiting what should be happening in Turkey today. We are having Marco Rubio meet Vladimir Zelensky there. There is no indication at the moment that Vladimir Putin is going to be showing up for these direct talks that have been backed by Donald Trump and several other leaders as well around the world. It doesn't look likely that is going to happen. They're going to be meeting face to face. But we were talking about the dollar and kind of the weaker manufacturing story that might follow. A reason to not do that is to have tougher sanctions. And I think this is a really crucial piece because at the same time that we're talking about a ceasefire, the EU is talking about tougher sanctions on Russia. There is a potential question in Congress about tougher sanctions on Russia if Vladimir Putin doesn't end up meeting Vladimir Zelensky.
How quickly we get to that, then, get to that tougher sanctions environment, if we don't see this meeting taking place, is really important. But you referenced another meeting that is taking place in Turkey today, and this is NATO, various NATO officials. So Mark Rutte will be there, Marco Rubio will be there at Antalya, which is on the beach in Turkey. But they're talking about serious stuff. They're talking about the defence industry, talking about how you get spending up to 5% of GDP. Lots of countries, 8 and not even at 2%. They're talking about 5, but it'll be interesting to see how the dark arts behind this operate, because 1.5% of that 5 could be on defence-related spending, and how you define that is going to be the subject of some of these conversations taking place in Antalya.
Walk down the road and go to the Ministry of Defence, and I think you'll find out a lot of answers. Defence-related, that could be pensions, that could be, it's all kinds of different things.
Military mobility, dual-use goods, cybersecurity, possibly even aid to Ukraine. All of these things being discussed. Yeah.
But 5% is still a very big number. What do you have to give up to get to 5%? Or do you just... Germany probably is... Let's park Germany to one side, but everybody else is going to have to figure out, is this a zero-sum game, or do you increase deficits to fund this kind of thing?
Look at the deficit so many times this morning.
I know, it's a very happy morning.
I love deficits, yes.
Did you see, though, I think the German defence minister is saying he will not rule out conscription either if they can't get the numbers. So it's going to have a social impact as well, potentially some of this spending as well. As I say, we've got some great guests coming up on the show that we're going to be talking to about all of this. Antoine Flammarion, am I saying that right? Tikehau Capital, co-founder. I don't have to actually answer that question because Francine does, because she's going to be doing that interview from the JPMorgan conference, which is going to be taking place in Paris. Francisco Blanch is going to be joining us, Bank of America's global research, commodities and derivatives global head. Lots of globals in there. He's very global. He'll be joining us later. Nanette Hechler-Fayd'Herbe is going to be joining us as well from Lombard Odier, EMEA CIO. And Kristen Keller is going to be joining us from Barclays, Economics Research Head. So we've got a great show lined up, some great guests to talk through all of the stories and answer maybe some of the bond market questions.
Yeah, maybe forecasting what we're going to be seeing later today on the data front. Plenty of that happening over in the States. But before we get to the economic data that may bolster some of the arguments that we're going to be talking about on this show, We've got Walmart earnings hitting up at 12 p.m. UK time, about 7 a.m. Eastern for the New Yorkers that may be watching this at this hour. But if we're concerned about a consumer here, Walmart is going to be a key piece of that. They are potentially a price maker in this situation. Can they actually have a bigger role in the inflationary story? U.S. retail sales are part of that conversation, PPI as well. And, of course, Chair Powell, what will he say about maybe the geopolitical changes we're seeing in the world?
Now is your chance to talk about the part of the mush that is Walmart and retail sales.
Let's talk about retail stuff. If the US wants to have a more balanced economy with the rest of the world, presumably the US consumer needs to consume less. So in theory, at some point, retail sales has to drop and kind of reflect that reality. At the moment, the US is the consumer of choice for everybody. Here's all our stuff, you consume it. At some point, that narrative has got to change. I think short term, there'll be a lot of interest in what is happening with tariffs as well,
yes,
which I think will be interesting as well. But I think the bigger picture here is that US consumers consume a lot of stuff.
And Tom drew our attention to the fact that you might get different trends in goods if you're trying to get ahead of tariffs on goods, but therefore pulling back on other things to make space for that pulled forward goods demand.
Absolutely. And we still don't know who's bearing the brunt of this cost. Is it the end consumer? Is it, I'm going to use Walmart as an example. Is it Walmart in the middle ground that then is paying for that as the goods kind of land at the LA port, for example? Or is it ultimately the ports that are paying it? Is this going to show up in the PPI prices, for example? We get all of that data set today.
Yeah, I mean, where that cost falls is really fascinating. And all the lessons that a business like Walmart is learning through this experimental phase in tariffs will be incredibly interesting. What have they learned about inventories? What have they learned about supply chains and how vulnerable they are to this kind of political action?
The Wall Street Journal's got this great piece this morning. I think it actually came out yesterday, but it's about basically the fact that US consumers have consumed so much stuff that there's now battles within families about how you get rid of all the tat that you've bought that was cheap, and kind of people storing stuff in cupboards and kind of anyway. This is kind
That's
of,
not
how do you
restricted to the
declutter?
US, I'm
no,
sure.
I appreciate we have smaller houses here, so we are less able to.
Well, the buying in bulk theme is very American, isn't it?
Exactly. So does that come to an end now? Are we reaching the end of cheap stuff for America? Does stuff
Scott
get more
Bessent
expensive?
has said that's not the American dream.
Yeah, precisely. And Donald Trump was talking about that little girls in America are going to be having $1 rather than $30.
This American loves cheap stuff. Can I just say that?
Well, but that's the thing, is that the cheap stuff story has driven a lot of this. And does that now come to an end? And I wonder whether that would be an interesting question for Walmart and maybe around these retail sales numbers as well. What else do you need to know this morning? Let us walk you through the details. The White House is touting President Trump's art of the deal on the second leg of his Middle East tour. It says that Trump has secured agreements worth more than $240 billion with Qatar, including a $96 billion order for up to 210 planes from Boeing. GE Aerospace is going to be providing the engines, it seems, for that deal as well. Bloomberg has learnt that the UK is drawing up plans for a special visa for foreigners who invest significant sums into Britain. Ministers are considering an investor visa open to people willing to fund strategically important sectors such as AI, clean energy and life sciences. The preparatory work comes against the backdrop of a backlash over rolling back non-dom tax breaks for wealthy foreigners. And Sanofi says it will invest at least $20 billion in the United States through 2030. The French drug maker joins other European firms, including Roche and Novartis, who have pledged to boost research and development spending in the US. Remember, President Trump signed an executive order earlier this week aimed at lowering drug prices in the United States, but he's also signalled that he wants drug makers to produce more in America as well, Anna.
OK, coming up on the programme, let us tell you what we are focused on. Siemens revenue rises after a boost from China. We will check in on the German giant's shares at the market open. Plus, oil falls after optimistic tones from the Iranian side around nuclear talks, what they would be prepared to give up in exchange for sanctions relief. We will dig into the market reaction to that reporting from other media. The oil price down by 2.3% in today's session. Up next, we're out to the JPMorgan conference in Paris, where Francine will be speaking with the co-founder of Tikehau Capital. If you have questions, if you want to get involved in this conversation, the conversation's taking place in Paris, please do use IB plus BBTV Go to join in the conversation. This is Bloomberg.
Thursday morning, good morning. 42 minutes to the equity market open. Futures are a little soft, as you can see. They're not that soft, but they're a little bit soft. Keep an eye on this. It does seem as if the recent rally in equities has run out of a little bit of steam. I suspect that's going to be very much a subject of conversation at the JPMorgan Global Conference, which is taking place in Paris. Of course, Francine Lacroix is there, and of course, she's got some great guests, so let me hand it over to her.
I know, Guy. The problem is that it's very difficult to stay away from Paris. So every time there's something in Paris, I try and get in. Plus, we have good weather. And I could not be more delighted to be here at the JPMorgan Capital Markets Conference, joined by Antoine Flammarion, who's the co-founder of Tikehau Capital. Antoine, thank you for joining us. There's a lot going on. There's a lot going on at Tikehau. There's a lot going on in the world. Now, you're also embedded in, for example, defense, climate change, and key issues. What is the way forward in terms of where you want to put your investments?
Good morning, Francine. Good morning, everybody. I think, the world is changing super fast, and you have to adapt. As a company, not only a financial or an alternative investment company, you have to adapt. And the world is changing fast, and it's doing 360 all the time. 6 months ago, it was all about the US, then it changed with the tariff, and then we are back. So you have to adapt all the time, and that's what we try to do.
I mean, on the tariffs, it's good news because it's better than it was a month ago, or are you still in a wait-and-see situation? Do you want to deploy capital?
On one hand, it's a good news, but you have to say that the worst thing is uncertainty. And when it's changing all the time, when the legal framework is changing, when everything is changing, it creates uncertainty, turbulence, and very difficult to operate. Also I must say, for entrepreneurs, it's probably a very good environment, because you're probably more agile, more nimble, and you adapt. But it's not super easy.
Yeah, but is the money going to the right places? In terms of flows, are you able to attract money, for example, from the US, or do they come from elsewhere?
That's something totally new. It's probably, we started 20 years ago. It's probably the first time that we see money from Asia, from Canada, from all around the world, even from Middle East, attracted by Europe, because they feel like, we've been all over the US, the market is big, the dynamics is amazing, but if you start having some uncertainty, you don't really like that. So for Europe as a whole and all the sector, it's probably very good. So I think we're going to enjoy a strong ride because of that.
Especially in defense.
And obviously defense is becoming the next big thing, but as I must say, you have to be very cautious because it changes all the time. A few years ago, people were all about climate change. Now it's all about defense. And by the way, the more you talk about defense and weapons and all that, it's not great overall. I mean, defense is helping democracy, no doubt, and Europe is lagging. So there is more money, going into that, which is a good news. But we probably have to be cautious. But the trend is fairly massive there.
What's your biggest concern right now? There's a lot of question marks about certain spaces in credit and real estate. Is there anything that looks very tense?
So I must say, things are changing very fast. So if you look at geopolitics, you had Ukraine, you had Middle East, and suddenly you have India and Pakistan. So I think geopolitics is probably our main concern. That's why you have to build a global, diversified business, because you never know what happens. So geopolitics is one, I must say. Cyber is probably two, because you see more and more cyber attacks. And everybody now is living on the digital world, the cloud and all that. And by the way, it ties back to sovereignty. So I would say geopolitics, cyber, and credit risk, default. The economy is growing less, no doubt. You will have default, but it's not creating systemic risk. If you have a massive geopolitics things, then or something like the tariff, then it's giant turbulence. Credit risk, economic cycle is not a major threat in our view.
So there's nothing that could be systemic, basically. There's nothing that
I think from an economic point of view, when it becomes systemic, it's when it comes to liquidity. Each big crisis, the sovereign crisis, the subprime crisis, is about liquidity. So we may see some hiccup probably in what people call the semi-liquid fund. People have been buying private assets in semi-liquid format, and when you have long-term assets, you need to have long-term money. Is it creating a major risk? No, but you will have probably a bumpy road on that. Yeah.
Antoine, what does it mean for where you want to either hire people or actually put a lot of your employees? What industries and actually regions are you focusing on?
So it's a very good point. You want to hire the people everywhere, probably, because, as I said, you start having risk everywhere. So you want to be big in Italy, big in Spain, big in Hong Kong, big in Canada, and we put more and more resources around the globe. Now we are operating in 18 countries, and the plan is to keep doing that, diversify from geography and also from an asset class and sector.
I mean, I know there's a number of rumors of you listing. Are you listing anywhere? And if so where would you be attracted to list?
I think, European capital markets are weak. We all know that. There have been less IPOs. Hopefully there are IPOs coming back in the UK now. But when you are listed, you need to be operating when the market is strong. And I must say, US markets are very strong. We have also a listed REIT in Singapore. We have a listed REIT in Paris. Tikehau is listed in Paris. We like being listed and using the capital market. So we may list at some point in time one of our business somewhere, in addition of being listed in Paris, probably.
I mean, you talked about the UK actually IPOs maybe being back.
Yeah.
Is that because the UK is relatively safe politically compared to other places, or is it because they're doing actually incentives?
As the world becomes uncharted, people realize that the old democracy, and UK is obviously among them, remain fairly safe. And the City of London remains the City of London. That's why also we are expanding there. And I think IPO are coming back. The largest investor and player from around the world are still operating from London. The sovereign wealth fund, they all have offices in the UK. From time to time, they open here, and thanks for that, in Paris, and tomorrow in Italy, I'm sure. But UK remain the place, I think.
Antoine, are you frustrated that we don't have a working capital markets union or banking union in Europe yet?
I think we need to unify that, and it's capital market in Europe, it's defense issues in Europe, and I think Europe has been fragmented almost from the beginning. I think that the world became more uncertain, and I think it's a chance for Europe to shine and to integrate capital market, sovereignty and all that, and I think it's going in that direction.
Antoine, thank you so much for joining us.
Thank you, Francine.
Antoine Flammarion, there, co-founder of Tikehau Capital. Now, with that, I'm going to send it back to you, Anna. Of course, in London, we'll have plenty more throughout the day here in Paris.
Thanks, Francine. Bloomberg's Francine Lacroix, of course, at the JPMorgan Global Markets Conference in Paris. We have plenty more coming from that conference. Interviews, of course, front and centre, including an exclusive conversation with Jamie Dimon, Chairman and CEO of JPMorgan Chase. So we'll certainly focus in on that, get his view on some of the big themes, the investability of the United States, the weakness in the dollar, all of that, no doubt, front and centre.
I wonder what's front and center on his mind. Is it the trade talks? Is it the deficit? Is it the ceasefires, the 3 ceasefires that Donald Trump is trying to navigate right now? I don't know what's top of mind for Jamie Dimon.
He's been worried about the bond market for quite some time. He's talked about this problem time and time again.
Why you're worried about the bond market?
Of course, if Jamie's worried about it, I'm worried about it. That would certainly be not an unreasonable position to take. But clearly, he has been concerned about this, and this is. Just as the politics are evolving in the United States, he's obviously close to that story as well. He's got a pretty good idea of what is going on. How does he feel about wider deficits in the United States? How does he feel about this tax bill that is going through Congress right now? Does he think that we are ultimately heading for a showdown? Is the bond market... Are the vigilantes awake, wide awake, and what are they going to signal? And is he amongst their camp as well?
We had an interesting story this morning somebody suggesting that the US might need a Liz Truss moment to I suppose, be reminded of the power of bond markets. I'm sure there are plenty of people who know that very well. But that, according to Stephen Jen, a market veteran, as he is described in the Bloomberg copy.
Do you want to be described as a market veteran? I'm not sure I would.
I don't know. Well, does it even do you any good when every market veteran is saying, I've never seen this before, I don't know what to do and what to navigate? And that's just the bond market story. We talked about the dollar as well. That all has ripple effects into the oil picture as well. We're going to dive into the commodity story next with our Francisco Blanch from Bank of America Global Research, joining us around the table, talking to us about the dynamics at play here. We'll talk a little bit about Russia, about OPEC, about the shale patch, all that coming up next. This is Bloomberg.
Thursday morning, let's call it 30 minutes until the start of trading here in Europe, just a little less. Looks like a fairly negative picture is beginning to emerge in terms of the story this morning, but not down by much. We're down by a little bit. There's a few corporates you want to fold in. But the recent rally in equities that kind of commenced at the beginning of the week with a big trade turn seems to have maybe run out of a little bit of steam. But I think equities equities are interesting. Bonds are fascinating.
You're very fascinated by bonds this morning, aren't you? And a lot of the excitement has been around the US markets, of course, and what we saw there yesterday, 30-year yields headed to 5%, 10-year yields over 4.5%. Let's have a look at how European bond markets, with all of that in mind, are responding this morning, and we see some slight movements, some buying of bonds, some yields a touch lower. Now, I mentioned just before the break that we had this story on the Bloomberg terminal that the market veteran Stephen Jen says the US may need a, quote, trust moment to cut the deficit. And as if by magic, Valerie Teitel has analysis of this very subject to bring us this morning. Valerie, good morning.
Good morning, Anna. Yes, possibly is the 30-year yield sending us a warning sign. In the Asia Open, 30-year yields hit 4.98%. Anna, we are very much flirting with that 5% level that we've breached twice earlier this year. Now, this to me is the market is now more focused on this tax bill making its way through the House than it is on tariff policy. I think that's going to be the theme driving forward. The market focus is going to be on the amount of spending that could potentially come out of that tax bill. The long end is telling us it might be too much. We're also seeing yields rise in the front end, up some 15 basis points this week on 2-year yields. This says the market really pushes out those Fed cut expectations. Those recession fears are abating, but taking those two things combined, Anna, we are seeing yields rise across the curve, and it is denting the equity market rally this morning. Note that since the start of the week, we're still quite positive on S&P 500 futures, up near 4%, but we are taking a hit this morning. And my guys, it's because of that long end yield.
OK, so that's where Valerie's thoughts are on the long-end yield and the signals that it is giving us. Let's go then to find out what has caught Critty's eye this morning. We've talked a lot about deficits, a lot about the weakness in the dollar, a lot about bond markets this morning. What else is left to discuss, Critty?
Well, I feel like when we talk about bond markets or the dollar, there's a little bit of a question here of whether oil is a lagging or leading indicator when you look at some of those cross-asset correlations. That really matters when you're talking about a global trade story and an OPEC story that's pushing those prices down and actively affecting the southern part of the United States, and clearly the shale patch there. That is going to have a ripple effect in terms of jobs, in terms of prices, and in terms of inflation stateside as well. So the piece that caught my eye in the last 24 hours actually came from my hometown of Fort Worth, Texas, a survey, a live survey done in one of the largest shale patch conferences there is in the United States about where oil prices may be by year end. Right now, we are around 60, 64-ish. That's kind of the range that we've seen in the last couple of days. Well, this, according to this live survey, most participants think it's going to be $60 by year end. That's kind of bang in line with where we are right now. Remember, the Dallas Fed survey had also come in with the idea that a 55 level is the break-even piece for the shale patch. And that's really where you start to have the conversation that is it worth to do some drilling in the Permian Basin. That's going to be a key piece. But look at some of these other moves as well. 25%, a quarter of that survey said $55 by year end. Another 25 saying go above 65. So, Guy, if we kind of average this all out, it feels like the shale patch is saying even with all the tumult, even with all the turmoil, we are right now where we might end the year.
Yeah, indeed. So, but lots to watch when it comes to the energy markets. And for the last couple of days, Guy, the narrative around Iran, or certainly the last 24 hours, the narrative around Iran, whether you believe the reporting out of other US media or not, does seem to be having an impact on the oil price. We're down by 2.4%. That seems to be at the sort of coalface. Wrong energy type, but anyway, coalface of the oil market. That seems to be what's driving sentiment.
Crude's down 2.4% this morning. That's a fairly chunky move, considering we are heading towards kind of a 5 handle rather than a 6 handle. We're at 64.52 on Brent at the moment. Do we get to a 5 handle before we get to a 7 handle again? I.e., do we trade in the 50s before we trade in the 70s once again, or do we just remain locked in the 60s? Let's ask that question to Francisco Blanch, Global Head of Commodity and Derivatives at Bank of America Global Research. Good morning.
Good morning. Good morning, guy. Thank you for having me. I think we probably hit 50s before we hit back into the 70s.
Okay.
And part of it is OPEC is, or Saudi Arabia is in the midst of yet another price war, if you like. They're increasing production, and they're increasing production for 3 reasons. I think we are definitely seeing an action to discipline members that have failed to meet their commitments.
Yep.
There's also a bit of a market share story, right, that has been playing out for at least a year. They've been warning us for a year. They needed to get some market share back. And there's a third reason, which is obviously the Trump visit to the Middle East and the ask from Trump to help him fight the inflation upswing that we've seen in the U.S. with lower prices. So those are the three elements. Depending on how you weight those elements, you might think.
How do you weight those elements? What is the most important factor out of those three?
So I think short term is probably more kind of the Trump visit.
When he goes home, do prices go up?
Not necessarily. I do think that there is an element. Well, we're getting close to July 4, which remember is the seasonal peak for demand in the U.S. and typically globally as a travel season. So we're about a month and a half before we hit that kind of thriving moment where demand really picks up, and then we go into the maintenance season, right? And markets are a couple months ahead always of what will happen. And I think the other element is the Saudis are giving us a roadmap for the next 18 months to bring production back, and they intend to meet it, right? And the market doesn't really need all that oil. So I think we're going to see lower prices. We're going to see contango in the front end of the curve potentially, i.e. the spot price may fall below the forward. And now it's going to be a long price war, but it's going to be rather shallow. So I think it's going to be very different. The opposite of the 2020 price war, which was really very short, but also very deep.
Negative. That's very deep.
Negative. Very deep.
That's very deep.
Well, for WTI, for Brent just went down to 20. Right?
Okay. I forget that detail. Let me. So that's interesting. So you say it won't be such an aggressive price war, but you did say 50 before we get up to 70. So I mean, is 50 some kind of bottom? Goldman Sachs yesterday was talking about they've done some analysis of when President Trump gets active, talking about oil prices, and they say it's when it's in the. He wants it between 40 and 50, is their analysis. Right. Do you think, does that matter to markets?
I mean, I think that's probably a little too low. I don't think we'll get into the 40s for a host of reasons. I think Saudi Arabia needs to also maintain its budgetary position, right? So I don't think they want to drive it that low. But they are trying to get their market share back, and everyone OPEC hasn't really been cutting. So I think probably the answer to me is Brent kind of bottoms out between 50 and 60. And then eventually we see better growth dynamics. We'll probably see more demand because the lower prices go, the more people want it, right? I mean, that's also part of the market dynamics, right?
Okay. Let me pivot towards the European space and grids, renewables, that whole conversation, Francisco, because it seems as if we haven't quite finished that conversation that started when we saw that blackout in the Iberian Peninsula. And we didn't necessarily all get to the bottom of what was going on there, but there was a lot of talk about the role of renewables. You've been writing about this recently. What do we need to know about the role of renewables and grid resilience?
So I think we need to know, the main thing we need to know is we need more backup, right? I mean, there's not enough grid inertia, I think, in some of these renewable heavy grids, right? So, and that requires investment. We are running effectively 10-year-old technology in 100-year-old grids, and that requires a lot of investment in the power sector. So we've obviously done the cheap part, which is to set up the solar panels. We haven't done the more expensive part, which is to look at transmission lines more carefully, which is to look at maintaining the right levels of inertia. And you know, probably you need a nuclear rethink, which is already happening across many parts of Europe.
And are prices okay? Are they high enough to drive that investment?
We think power prices are likely to keep falling because the issue is renewables, right? I mean, there's a technical issue we're talking about. There's also a price issue. Renewables produce power at a marginal cost of zero. So that makes it difficult for everything else to work price-wise. And that may have been some of the problem in the Iberian Peninsula in the days coming into the blackout. Remember, we had negative pricing the days prior across most of Europe because April is a time of the year where we have little demand because it's not very cold, but we have lots of supply because it tends to be pretty sunny. So we ended up with a lot of the thermal plants, or some of the nukes were on maintenance. And that, I think, left the network with little inertia to meet that oscillation that ultimately triggered a blackout. So that's how we think about it. But the reality of the matter is these power networks are going to require a lot of investment, but also potentially the derivative markets to help find solutions. I mean, you have negative pricing for sections of the day in many power markets, and that's telling you have to invest in storage. Right? You need more stored power.
Something else that the EU is focusing on, in addition to the grids and the renewables, is the potential of more sanctions when it comes to Russia. And this falls back into our earlier conversation on oil and bringing down the price cap even further. Is something that's been floated in Congress if we do see more progress on potential ceasefire talks in Ukraine and Russia. How effective are sanctions on Russia right now? Is this something the oil market should be caring about, or has the damage mostly been done?
I mean, look, there's always ways to tighten sanctions farther, right? So there's secondary sanctions, and we've seen that creating a certain amount of pain. I mean, I think the hard part here is that Europe is trying to win itself off from Russian gas, but Russia still remains the second largest supplier of LNG, liquid natural gas, into Europe, right? Still remains a huge supplier of, second largest supplier of oil within OPEC, second largest exporter of crude oil in the world. So that's the hard part, and I think, I think ultimately some of these sanctions have, of course, they do inflict some pain in Russia, but they also end up inflicting pain in European consumers. So that's the thing you need to balance out, and in the meantime, you got to build out this grid that we talked about, renewables, and potentially just look for other solutions. I mean, I think we have to fill the gap. By 2027-28, things will be easier. There'll be a lot more LNG coming from the U.S., which is why the European Commission has been looking at the end of 27 as the period where Europe can break away from Russian gas. But still, that's still 2.5 years away.
That lag is concerning for a lot of folks. They wonder if the congressional story comes up before the EU is able to act on it. Talk to us a little bit about the gold price as well. Given all these geopolitical tensions, gold was flying, and now it's not. What's going on there?
Well, I think the gold story is pretty straightforward. It was a very overpositioned, right? I mean, if we look at our global fund management survey, gold was the most overly positioned asset across the spectrum, right? So everyone was long gold, was the trade. But in order for gold to sustain rises above $3,500 an ounce, you need continued investment demand. You need continued central bank demand, Again, we are up about 5% year on year. We think you need to be 10% and above. Remember, jewelry demand is down 20% year to date. And one of the issues in the gold market is that, again, prices have become quite volatile in this run-up. And typically when prices get volatile on the way up, it tends to signal a change in trend. It tends to signal potentially a temporary peak. Now, I'm not necessarily bearish longer-term gold. We still like gold in the long run, but we had a $3,500 dollar per ounce target, and we believe for now the peak might be in, and we might have to see another layer of tensions building up from the U.S. Not the case right now. Tensions are coming down on the trade side, as you know. Yep. The China deal on Monday, I think, has been a big relief for markets. So that's, I think, going to put a little bit of downward pressure on gold. For a few months, potentially.
35, this chart here, it's not one peak, it's two peaks. You can see it on the screen as well. Right. You've got a double top. Right. Come up to just north of 3,400 twice. That's generally not a good sign. That generally tells you that the market is kind of coming up to these levels, finding a problem, and coming back down again. How hard is it going to be to get north of this level? I just from a sort of your experience, how big a line in the sand is that now?
It's a pretty big line in the sand. You need to see another massive layer of geopolitical uncertainty.
Massive layer?
Yes, massive layer.
So it's quite the bar is high, therefore. You use the word massive.
Massive layer, right? So remember, the trend is, trade is coming back together. We have 90 days, right? But so trade is coming back together. So hopefully the global trade system doesn't collapse, and we have some agreements. And maybe, who knows, maybe we have an economic boom coming on the back of this potential trade deals, right? A reordering of trade. So it would be bad for gold, good for equities. And then the other big question mark to my mind is the geopolitics of Russia-Ukraine. I mean, that's one area where things could still get better. Maybe not this weekend, as we were hoping, because we've heard that the Russian delegation doesn't have the seniority that maybe we were expecting. So that's one area where things could get bad again, right? So, again, think about U.S. imposing sanctions on Russia or some other layer of pressure. That could be that's kind of what I refer to, right? Yeah. So geopolitical tensions, U.S.-Russia building up. We don't see it right now, but that could be a reason why gold might pick up.
So that's an area of geopolitical tension, and that's an area of sanctions focus. Another one, but sort of moving in the other direction, could be Iran. And I guess we're back to talking about oil here rather than gold necessarily. But, I mean, oil prices down 2% on other media reporting what Iran might be prepared to give up in exchange for reduced sanctions. I mean, where would oil prices fall to if we saw Iran coming back in? I mean, that seems like a far-fetched question, perhaps, but things move quite quickly.
Indeed. So I think if Iran came in, the backdrop for oil could get more negative quicker, right? And no question. And the Iranians have been still exporting oil. Question is what kind of deal we end up with Iran. In my mind, there will be a deal with Iran, most likely, because I think the Iranians want it. They've had major losses with their regional allies, as we all know. I think Trump's been very vocal as well. President Trump's been very vocal about wanting to bring Iran back into the fold international community, so to speak. I think the U.S. partners in the Middle East also want a stable Middle East. And, everything we heard from President Trump was Middle East peace, 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 right? And so to me, this is an opportunity for Iran. It's an opportunity for Saudi Arabia, the rest of the Middle East countries, and the U.S. of A. to come up with a deal. So this is a bearish backdrop for sure. And in my mind, the partnership, everything seems aligned for it, with perhaps the exception of Israel, which has been vocal on the other direction. So yes, there is an additional backdrop there for
Francisco, thank you very much. Thanks for joining us. Francisco Blanch, Global Head of Commodities and Derivatives at Bank of America Global Research. Coming up on the programme, we're watching the read across to the European sports retail space with Dick's Sporting Goods in the United States. It's said to be in advanced talks to buy Foot Locker. We'll talk about that next. This is Bloomberg.
I want to take you straight to Qatar. You're looking at live pictures coming from there. The president is currently flanked by Kelly Ortberg, who is the CEO of Boeing, and Larry Culp, who is currently talking right now, who, of course, is the CEO of GE Aerospace. Both huge recipients of this order that we have just seen coming out of Qatar Airways for Boeing aircraft. Kelly Ortberg is now speaking. He is, of course, as I say, the CEO of Boeing. And the two of them are going to be providing the kit for this order. Making the kit could be interesting. Maybe we just listen in for just a moment.
Be selected by Qatar for this largest wide-body aircraft order in the history of Boeing. Major accomplishment for us, and thanks to the administration for your support.
That's the largest order you've ever had, right?
Yeah, for wide-body.
So one of the largest orders in history, but it almost has to be, if it's the largest order you've had, has to be pretty close to the largest order ever made, right?
Yeah, that's correct.
And you also, Boeing also got the jet fighter. We selected Boeing for the jet fighter, the state-of-the-art, highest level. It's an amazing-looking plane. If it functions as well as it looks, I think we're going to have a big winner. But we're also looking at some additional jet fighters. We have some really good ones that we have. We're taking a look at, strong look, from one of your competitors, I must say, and we're doing something very special. But it's a special country. We were losing the Middle East because the past administration didn't handle the relationship properly, didn't show the kind of respect that they deserve. And I have a lot of respect, and I have a lot of liking. I like the Crown Prince a lot. I've known him a long time in Saudi Arabia, and the Emir is fantastic. And we're going to another country in a little while, UAE, a fantastic man, fantastic leader. And they have great leadership talents in this part of the world, and that's why they're doing so well. And you probably read today the story about Iran has sort of agreed to the terms. They're not going to make, I call it in a friendly way, nuclear dust. We're not going to be making any nuclear dust in Iran. And we've been strong. I want them to succeed. I want them to end up being a great country, frankly, but they can't have a nuclear weapon. That's the only thing. It's very simple. It's not like I have to give you 30 pages worth of details. There's only one sentence. They can't have a nuclear weapon. And I think we're getting close to maybe doing a deal without having to do this. There's two steps. There's a very, very nice step, and there's a violent step. The violence like people haven't seen before. And I hope we're not going to have to do this. I don't want to do the second step. Some people do. Many people do. I don't want to do that step. So we'll see what happens. But we're in very serious negotiations with Iran for long-term peace. And if we do that, it'll be fantastic. And for this country in particular, because you're right next door, you're a stone's throw away, not even, right? You're a foot away. You can walk right into Iran. Other countries are much further away, so probably it's not quite the same level of danger, but we are going to protect this country. It's a very special place with a special royal family, and the head of the royal family is two heads of the royal family, really, if you think. Great people. And they're going to be protected by the United States of America. And I think we're not going to have to do it because I believe very strongly in peace through strength. Now, we just gave out in the budget a $1 trillion budget, which is the biggest we've ever done. $1 trillion. Never came close to a number like that. We'd be at 800. It would be at 800 billion. Would be at maybe 900, 910. We never got anywhere close to $1 trillion, but we're doing it. Hopefully, we will not have to use these weapons. We make the greatest weapons in the world. We make the greatest fighter jets. We make the greatest, I guess Larry would know better than anybody, but we make the greatest planes in the world, the greatest missiles and defense systems. The Patriot system is the best acknowledged to be. I mean, this isn't from me. And we have a lot of it now. It's under order. And we're coming up with new systems, and we're coming up with a new system of drones, because drones are really, if you look at the war that's going on, it's horrible, but we are watching it very closely, and drones really seem to be taking over that war. And so I hope you're going to come up with some nice, inexpensive engine for a drone so that we don't have to spend so much. I asked one of the companies, I said, I want a lot of drones. And, you know, in the case of Iran, they make a good drone. And they make them for $35,000, $40,000. So I said to this company, I want to see it. They came in 2 weeks later with a drone that cost $41 million. I said, that's not what I'm talking about, $41 million. I'm talking about something for $35,000, $40,000 where you send thousands of them up. And that's a great way. And they're very good, too, and fast and deadly. Horrible, actually. When you look at what's happening with Russia and Ukraine, the drone is killing tremendous numbers of people. You hide behind a tree and the drone comes down and it circles you with fire. You don't have a chance. The tree comes down also, by the way. It's so intense. I mean, you see these trees being knocked down like they're being sawed down by a top-of-the-line timberman like, you know, who? Sean Duffy. Do you know that Sean Duffy, the head of the Transportation Department, who's working right now on the airports and getting a system because Biden didn't do a thing for 4 years, and Pete Buttigieg was the head, and he goes bicycling to work. He takes a bicycle to work. Can you believe it? He's running the biggest air system in the world, and he takes a bicycle to work. And they say he's going to run for president. I don't see it. Who knows, right? But I don't see it. But when I look at what they've done, it's so horrible what they've done. And the work they did do, they wasted billions of dollars. They're trying to hook up air systems to copper, and they tried to hook up copper to glass, and the glass doesn't work with the copper. And they had 30,000 different contractors doing 30,000 jobs. And when they put it all together, they spent billions of dollars. It didn't even come close to working. And we're going to be giving out a brand new system. It's very important. We'll have the best system, and we think we know who that system is. But we have a lot of bidding. But we want one check. We want a unified system. We don't want to have 5,000 contractors in all different places, some digging ditches and some not doing ditches because they want to go by satellite. Satellite seems to be the way to go. But so we're going to be giving that out pretty soon. But what people don't know about Sean, because I mentioned lumberjacks, that Sean. You probably didn't know this. That I'm not talking about this Sean. This Sean, no, not this is not. This is a different Sean. Sean Duffy, the head of transportation. He's a great Sean, though, I have to tell you. But Sean Duffy was the world champion for 5 years, climbing trees and down, up and down, world champion. So that's what you call a serious lumberjack, and he's doing a fantastic job too. A really respected guy and a terrific guy. And I mentioned the champion because. When somebody's a champion, he's the world champion for a long time. He came down, when you come down those trees, coming down at a rapid, he said that started getting you back. You will often break your back. You miss a shot and you're coming down a lot faster than the human body was meant to come down. But he's doing a fantastic job at transportation. But this has been a very historic trip. I watched some of the people talking about it, and even what I would perceive as enemies of ours, people that are not fair from the press, are saying it's been amazing. We've raised trillions of dollars in investments. There's never been anything like it. And just to finish, we have a country that now has, I think, Howard, we can say that at least $10 trillion of investment and potential investment. And if the past administration did $500 billion, it was like a lot. But we did it in 2 months because it's actually a little more than 3 months. But I always say the first month I had to get a little bit acclimated. So I didn't really do this the first, but when we started, so we've really been doing it, Susie, right, for 2 months. So in 2 months, we're going to have over $10 trillion. No country's ever come close to that. No country. And I want to thank the Emir because he put up a lot in terms of investment. It could amount to 2 million, 3 million, maybe even 4 million jobs in the United States. And more importantly, it's really important stuff. It's tremendous refining capabilities. It's capabilities for very high-end. AI is a big subject, and it's a big subject over here, too. I always say, what are you investing in? It seems one thing everybody seems to have in common is AI. So I don't know if that's a good thing or bad. Maybe you shouldn't do it because too many people are doing it, or maybe you should follow the crowd, fellas, okay? So you're going to figure it out. We have a man who's here who has been unbelievable, Scott Bessent, who's our Secretary of the Treasury, and who's so respected. When he speaks on television, it's like everyone just says, oh, okay. I had somebody the other day said, well, Scott Bessent said. I said, well, that's pretty good, Scott. You know? So I'm a believer. I'm a believer. But when he speaks, the markets really listen. And the big thing is that we have, to me, the most important thing of all is that, forget about the recent stock market being so good. Much more importantly, we have hundreds of different big companies pouring into America now, creating jobs like we have never seen before. Now, the bad news, it takes a little while for that to, you know, when you build your factory and it takes 1.5 years, 2 years, and they're going to build them very fast, and they don't need financing. That's the nice part. They don't need any financing. They have plenty of it. But they're building factories at levels we've never seen anything like it. And these are, you know, 10 billion, 12 billion, 50 billion. I said, how do you spend 50 billion on a factory? We have the chip companies coming in from Taiwan. We have Jensen, as you know, coming in with 600 billion. We have actually the biggest company of them all. You know all about it, coming in. That was a big, Mr. Wei. I said, Mr. Wei, you're a smart man, aren't you? I never met him. And I said, because I understand you control 99% of the chips. Oh, yes, I do. I said, that's pretty good. I said, is there any way of breaking that grip? They said it would take you many years. So I said, you know what? If you can't beat him, you join him. But he's going to be building the biggest factory anywhere in the world in Arizona and spending over $200 billion. And we have Apple, as you know, it's coming in. And I had a little problem with Tim Cook yesterday. I said to him, Tim, you're my friend. I treated you very good. You're coming in with $500 billion, but now I hear you're building all over India. I don't want you building in India. You can build in India if you want to take care of India, because India is one of the highest tariff nations in the world. It's very hard to sell into India. And they've offered us a deal where basically they're willing to literally charge us no tariff. So we go from the highest tariff, you couldn't do business in India. We're not even a top 30 in India because the tariff is so high, to a point where they have actually told us, I assume you too, Scott, you were working on that also, that there will be no tariff, right? Would you say that's a difference? They're the highest, and now they're saying no tariff. But I said to Tim, look, we've treated you really good. We put up with all the plants that you built in China for years. Now you got to build us. We're not interested in you building in India. India can take care of themselves. They're doing very well. We want you to build here, and they're going to be upping their production in the United States. Apple. So Apple's already in for $500 billion, but they're going to be upping their production. So it'll be great. So I really think we've gone from a laughing stock 6 months ago to the hottest country anywhere in the world. And that's not just in business, that's in everything else, and it's psychologically hot, too. And I just want to thank everybody for being here. I want to thank the media. The media, I have to say, has been very fair. They've been very fair. They've been terrific, actually. I was watching some of our, normally they would not say good things, but they're having a hard time saying bad because this is a record tour. There's never been a tour that will raise, it could be a total of $3.5–4 trillion. This just in this 4 or 5 days. And it's from great people. And our relationship now is very strong with Saudi Arabia. Nobody's going to be bothering that relationship. Nobody would be able to break that relationship because of my relationship with the Crown Prince and the family. The relationship is really strong. And when you talk about Qatar, the relationship is equal. I mean, it's just like nobody's going to break that relationship. We have never had a relationship with Qatar as strong as it is now. You know that better than anybody, and they're very happy, and we're going to protect you. We're going to protect you. That's the one thing you need, maybe, but I don't think you're going to need too much of that. And I said last night, it was a great meeting, great everything. They brought in Lee Greenwood to sing. It was a beautiful evening, and I appreciate it. But I said last night that Iran is very lucky to have the Emir because he's actually fighting for them. He doesn't want us to do a vicious blow to Iran. He says, you can make a deal, you can make a deal. He's really fighting, and I really mean this. I think that Iran should say a big thank you to the Emir because the Emir is fighting very much that we don't. And there are many people that want me to go the other route. They say, just knock it out. Because nobody can beat us. We have the strongest military in the world by far. Not China, not Russia, not anybody. We have the best military equipment in the world, and we have the strongest military in the world. If you remember ISIS, General Raisin Kane, right? We knocked it out in 3 weeks. Remember they said it would take 4 years to knock out ISIS? We did it in 3 weeks. That's because you had the right leader. With a stupid person, you'll do it in 4 or 5 years. You won't even do it. You'll fight for 4 years and then you'll leave, like we always do. You fight. We had a president that blew up half the Middle East and then he left. That was it, It was like spent $10 trillion on blowing up the Middle East and then he left. Just said, let's leave now. You were left with nothing. And we don't do that. We take care of our friends. And so you have a great ally in us, and there's nobody even close. In terms of military power, there's nobody close. And I'm not only talking about nuclear. I don't like to mention the word because the nuclear is so destructive that it brings you into a different category. But we're number one in nuclear. I rebuilt our military, by the way, in my first term. We had a really successful first term. Then the election was rigged, and I had to wait, and it became more historic. And I was able to watch and see. And the good news is although it's bad news in another way, but the good news is that Biden was so bad, worst president we've ever had by far. There was never a president like this. This man was grossly incompetent, and now that's been proven. But people were able to see how bad it is, and it gave me a mandate. We won all 7 swing states. We won the popular vote by a lot. We won the counties by 2,725 to 505. That's why the map is completely red. When you look at it, the map, it was an obliteration, this election. And we got 312 electoral votes. So it was just an obliteration. And that means mandate. And we have a mandate that nobody's had. They said the most consequential election, and this was a enemy paper, the most consequential election in 129 years. So it's been a tremendous trip. I've really liked it. This is going, we're going 20 hours a day. And people say, how do you do it? And I said, I do it because I like it. I like it. I like the people I'm dealing with. I said last night, I stood on the line for, it seemed like hours. I said hello to Larry. I said hello to Kelly. I said hello to your 250 competitors. I said hello to everybody. And that was a long sucker, I want to tell you. They say, how do you do it? I said, I do it because I like the man standing on my left. And I said it 2 nights before about the Crown Prince, but last night I had the Emir, and he's fantastic. And I said, it's really not hard. You know, when you like the people and when you are doing something, we have a term, MAGA, Make America Great Again, very simple term. And I remember Biden saying, we will not let MAGA take over this country. I said, no, you stupid person. It says, Make America Great Again. It's okay if it takes over the country. It's called Make America Great Again. And that's where we are right now. It's America. We'll put America first. But because we're putting it first, we're doing so well, there's going to be plenty left over to help the world. And we can help the world psychologically. So we think we're going to do well with Russia, Ukraine. 5,000 soldiers are being killed every single week on average. 5,000. And they're not from here, and they're not from the USA. They're from Ukraine and Russia. So some people would say, why are you bothering? Because these are 5,000 young people. Well, they're getting older because they've gone through so many that they are actually getting older. But these are 5,000 people that leave their home, wave goodbye to their parents. Their parents are so proud of them, their sisters, their brothers, and that's the last they ever see them. They're wiped out. And if you would see the satellite pictures, I get satellite pictures of that battlefield, and I want to tell you, I've never seen anything like that. I wish I never saw it. You have heads and arms and legs strewn all over the field. And you just take a look at that, and, you know, when you think 5,000 a week on average, and that's actually a low number. So we're going to see if we can end that. I was thinking about going, but it's very tough because of what we're doing today and tomorrow. But, you know, if something happened, I'd go on Friday if it was appropriate. But we have people right now negotiating, and I think that I just hope that Russia and Ukraine are able to do something because it has to stop. Not only the money, we spent $350 billion there, just handed. Nobody even knows where the money, they just send them a check. There's no accounting, there's no one, just give him money. Every time he came, I have to hand it to him. I think he's the greatest salesman maybe in history. Every time he came to the United States, he'd walk away with $100 billion, you know. That's a good salesman, right? Even by your standards. This is a big standard right here. But that's a pretty good set. No, he'd walk in, leave with $100 billion. Last time he didn't do as well. He only got $60 billion. And it was so easy. It was like taking candy from a baby. That was the last administration. This administration has been a little bit tougher. But would like to see it end, and I think we're going to have a chance at doing it. And would like to see if we could solve the Iran problem in an intelligent way as opposed to a brutal way. There's only two, intelligent and brutal. Those are the two alternatives. So I want to thank everybody for being here very much, and we're going to take some questions, and perhaps now we'll ask the press to leave, and we're going to see you at the airfield. We're going to have a display of American equipment, okay? Yeah. Jennifer, go ahead.
Mr. President, no Putin's address. No Putin's address. Are you disappointed by that?
No, I didn't anticipate. I actually said, why would he go if I'm not going? Because I wasn't going to go. I wasn't planning to go. I would go, but I wasn't planning to go. And I said, I don't think he's going to go if I don't go. And that turned out to be right. But we have people there. Marco, as you know, is doing a fantastic job. Marco's there, Secretary of State, and we have people there. But I didn't think it was possible for Putin to go if I'm not there. Jennifer?
Do you have an update, sir, on the sovereign wealth fund, your proposal for the sovereign wealth fund?
That we're planning on doing?
Yeah.
Well, look, Howard likes the idea. I want to really make a lot of money, pay off debt, and just get it, and then you do it fund, you know. These people have no debt. It's nice to have a fund. I say to Howard, we're a little early because we have debt, and really, it sounds like a lot, but relative to the kind of income and everything that we have, it's not really that much. But it's still a lot, and I'd rather pay the debt off and then do the fund after the debt's paid off. And, you know, to me, the fund is just pay off debt. We're making a lot of money. We had a situation 6 months ago. We were losing $5 billion a day on trade. Now we're making money on trade. Don't forget, we were losing $1 trillion to China, so we essentially went cold turkey with China for a period of a month. Therefore, we weren't losing $1 trillion. You know, I think that's pretty simple, Scott, right? Scott did a great job over there. They made a deal. They have great relationships with China. You might want to speak about that while the press is here for a second, Scott, the relationship we have with China.
It was a very important step in establishing a working relationship below the two heads of state. So with the tariff program, we had a plan, we have a process, and now we have a mechanism with our Chinese counterparts to prevent an escalation again. We're going to go into a series of negotiations. They're going to be fulsome, and we have a lot to talk about, but I think over the next 90 days we can accomplish a lot.
We're going to be, I think I can mention, I'm not sure if the press will understand this, but I've devoted, I find it, number one, I find it fascinating. If you don't like things, you're not going to do well, but I do. I find it amazing. So I'm so looking forward to watching some of the power that they purchase at great price. But you'll see some jets today. Some of the reporters were in the plane. Were you in the plane as we were surrounded by 8 F-15s? You saw that? Were you concerned at all? It was a little bit spooky, right? It's a little bit different when I'm reading the name of the pilot from I'm seeing the name, Rigraw. I look at his helmet. He's got his name and he's waving to us, and he's like where you are. And so I'm not sure I feel great about it, but we certainly had a lot of firepower surrounding, and as we were coming in, it was beautiful. And then just before we landed, boom, they took off, and nobody's ever seen it. They circled the plane, 8 of them, and we're landing, so now we're there. And it was really a display of beauty, and we heard it too. We were in the plane. I said, "What is that?" Because they stepped on the gas, because it's hard for them to only go 500 miles an hour. That's called very slow. It's not that those planes they're not meant to go 500 miles an hour, but it's really good. Great pilots, great display. So we're going to see that. But one of the things for the people that are interested in the military that I asked to look into, the F-35, we're doing an upgrade, a simple upgrade, but we're also doing an F-55. I'm going to call it an F-55, and that's going to be a substantial upgrade, but it's going to be also with 2 engines, because the F-35 has a single engine. I don't like single engines. Even this man, he's the best in the world at engines, but on occasion, I know you won't admit this, if an engine goes out, it's nice to have 2, 3, or 4. That's why I like the 747. It's got 4. And but today they're getting very big, and it's a little more cost-saving to have 2 very, very big ones. But no matter how good, they tell me, Larry, the engine will never go out. Well, I think it goes out on occasion, very rarely. And we're going to do an F-55, and I think if we get the right price, we have to get the right price, and that'll be 2 engines and a super upgrade on the F-35. And then we're going to do the F-22. I think the most beautiful fighter jet in the world is the F-22, but we're going to do an F-22 Super, and it'll be a very modern version of the F-22 fighter jet. And I don't know if you know it, but you know who copied it? China. They copied it. I said, I'm looking. They said, that's the F-22. They copied our design, but they won't be able to copy our engines too quickly or anything else. So we're going to be doing an F-22 Super, and this will be a plane like no. To me, it's the most beautiful fighter jet ever made, and so I want to do that. And sometimes, stealth. They do stealth. I'm not a huge believer in stealth, because stealth is basically a lot of it's the design and the shape, and I'm sure you maybe think, but also if that's the case, they're going to figure it out pretty fast, I think. So you're going to design an ugly plane for stealth reasons, and then 6 months later, they're going to figure out this, and then you're stuck with a plane. Now we're doing a super F-22, and we're going to be going with it pretty quickly. And then, as I told you, we're going to be doing a tremendous variety of drones, from lots of very inexpensive drones, and on the F-55 and on the F-35, but much more on the F-55 and on your plane that you're doing, which he calls the F-47. F-47. I said, how'd you come up with 47? It's an interest. It was very nice, actually. But you said there's a tremendous capability for it. Travels with many, many potentially hundreds of drones, right? Do you want to talk about that? Because it's very interesting to people.
Well, the F-47 is the first sixth-generation fighter in the world. We're very excited to be developing that, and we'll be bringing that into production in the near future. There's not much I can say about that for security reasons, but we're very pleased to be in the development process of that airplane.
Yeah, it's going to be great. It's got a beautiful weapon, as you say. We're also doing very heavy on submarines. We have a lead on submarines that I don't think, unless you have a really, really stupid group of people, including the president, I don't think anybody can catch us on submarines. We have our submarine, in particular, the late model. We're 15 years advanced on the submarine. Nobody can even come close. It can stay underwater for 30 years. Think of it. The only reason it has to come up is for food. It doesn't need water because they have their system of water, which is they can stay forever. The only reason it has to come up is for food. Can you imagine? It could stay underwater for years, going at fast speeds, to very fast speeds, but it has to come up once every couple of months for food. There's something about that. I don't know if we're going to be able to solve that problem, but hopefully it's not going to be a problem we have to worry about. But the submarine, we are so far advanced in the submarine. So we're very proud of it, and we've taken a country that was scoffed at, and we're the hottest country in the world right now. We're going to keep it that way. And just in finalizing that, the military was having 6 months ago, and you wrote about it, Jennifer. I saw an article. But the military was having a very hard time recruiting people, our military. And they were not able to meet even come close to their goals. That was only 6 months ago. And now, as you also have written, we have a military that we have so many people want to get in. We've never had anything. They say 30 years plus because they only go back, but probably ever. We have never had such excitement to join the military. So we went with a military that couldn't recruit very easily and was really way, way behind, to a military where we're actually picking the people we want. And it's very hard to get in. It's actually hard to get in. And that goes for the police force and the firefighters. I always mention the firefighters. They're incredible. But the police force and the firefighters, we're having a very hard time getting people to become policemen like we had never had before. That was 6 months ago, Biden, because the country had no spirit. It was like just had no heart. It was a dead heart. Now we have the liveliest heart you've ever seen. So I just think it's such a great contrast to think 6 months ago you couldn't get, and now we're setting records. Who would think that could have happened? Thank you very much, everybody. Thank you.
Okay, we have wrapped up the press conference that the president has been conducting. Part press conference, parts speech dealing with a whole series and a vast range of issues. Just in terms of some of the headlines that have come out of it that are market moving, we are certainly seeing the Iran comments getting close to a deal, though other options are on the table, having a significant impact on the oil market. We'll come back to that. He talked about India. India apparently has offered to drop all tariffs, so pay attention to that one as well. We'll see how that one develops. And when Besant speaks, the markets listen.
Yeah, he also talked about Apple, didn't he?
Oh, yes,
He's been weighing in on Tim Cook's manufacturing destinations.
Yeah.
Don't build in India.
Yeah, exactly. Weighing on him, well, pushing him not to build in India, to build in the United States instead.
And those comments moving the Indian rupee tick by tick, not a massive move. I think, for me at least, the highlight are two key theses, which is, of course, he talked about Iran. He said that this is a two-step process. He doesn't want to get to step two, but that a deal is looking likely. That was enough to move the markets to the tune of 3.5% on Brent. He also talked about Ukraine and this idea that he didn't think Putin would attend if he didn't attend. So if appropriate, he may consider going to Turkey on Friday. So we, of course, will keep everyone apprised of those headlines and how that all fans out. In the meantime, while he was speaking, we did have the European markets open. Let's get an instant analysis if we can. Nanette Hechler-Fayd'Herbe, EMEA CIO at Lombard Odier, joins us this morning. Nanette, a pleasure to have you on the program. Thank you for your patience as we listen to the President of the United States. There are a lot of geopolitical headlines. The concerns around the deficit have fed back into the market narrative as well. For you, what is top of mind in terms of trading this market?
I think really now it's all about yields. In the recent days, obviously, as rate cut expectations by the Federal Reserve maybe got reassessed, global bond yields moved up, US Treasury yields moved up. But I think for the market to continue really building on this more constructive geopolitical setup and also much more compromising trade setup, it will be essential to see also those global yields, bond yields coming down. So this is really top of mind for me. And then I do think that risk assets continue to be on a very constructive trajectory.
If yields continue to move higher, though, can risk assets, and by extension, I think you're probably meaning stocks, can stocks continue to rally if we see high yields and higher yields and higher yields?
I think there must be a limit here. And I would just say I'm really expecting that now macroeconomic data in the US are going to show a slowdown in the second quarter, in the third quarter. And you contrast basically the real yield level at above 2% for 10-year US Treasuries, for example, with where GDP in the US is likely to stay closer to 1 or 1.5%, something in this ranges, and yields are bound to come down. So I'm really quite positive that there is going to be a move back. But even if yields were going up, we saw from recent past that equities can also overcome that hurdle if benefits, if obviously the earnings are strong enough to sustain that. So I think it's very important to continue watching here how much export and activity, economic activity, the new administration is really bringing to the United States.
And Nanette, are you staying away from oil stocks right now? Energy stocks, the worst performing sector this morning. Oil prices down by more than 3% in today's session because of geopolitical headlines around Iran, because of what the president has just said around Iran. A very soft price environment for oil is how Francisco Blanch at BofA described it to us earlier.
Yes, we would agree with that. I think that oil prices are headed lower. I think that supply is going to continue rising. And that is, on the one hand, very good for consumers in the US that have first to absorb increases in certain goods prices because of the tariffs. So energy prices coming down is very critical. And that is not very good historically for the energy sector, for sure.
Well, we'll leave it there. Nanette, thank you very much indeed for your patience listening to the president a little bit earlier on and answering our questions afterwards. Nanette Hechler-Fayd'Herbe, the EMEA CIO at Lombard Odier. This is the challenge. If yields come down because growth is slowing, is that good for equities? Maybe not. How good an inflation hedge are equities if yields continue to move higher as well? There's lots of kind of unknowns at this point in time. At the moment, the rally is in equities. Does that continue? Can that continue with higher yields?
There were periods where you used to get stocks rally just because we expected rate cuts, you know, so if growth slows sufficiently, then maybe that's the case. But, I don't know, a lot's changed since that period.
It absolutely has, because inflation, although maybe Jay Powell would disagree with this, is no longer the primary concern for a lot of these corporates.
And not with oil prices down 3%.
Exactly. Now it's a growth concern. It's ultimately keeping that market share, keeping a consumer engaged in terms of those purchases, despite some of the kind of cost pressures that they may face. More analysis after this break. Stick with us. This is Bloomberg. This is the opening trade, about 30 minutes into today's session. Seeing some softness in these markets across the board. I'm looking at a stock 600 that's down about 0.4%. The losses concentrated in the DAX and the FTSE 100 as well. Some of that is the oil story, really reacting to perhaps what we saw, or heard, I should say, from Donald Trump in Doha, talking about the gambit when it comes to China, India, Ukraine, Iran. All of that covered. So
the oil story is big impacted this morning. We're going to hear from Val in just a second by what is happening with the Iran comment. So it's going to be really interesting to see how that one feeds through as well. But Trump, it's interesting to hear that his kind of view on what is happening with the trade deals as well. Are we heading towards zero with India? He talked about that. That would be an amazing development. Does that take us below the 10% minimum tariff level that he's talked about as well? What happens on that front as well?
Yeah, he gave us some tantalising suggestions about what the Indians may have committed to. He said he gave us his view on what they committed to in terms of the trade deal with India, which we know is a very live conversation. I thought it was interesting, given the amount of focus we've done around yields and where the long end of the curve goes. Interesting that he said the focus for me is not on creating a sovereign wealth fund, it's on paying down debt. And that's something that maybe the market is going to be listening to a huge amount. And we also headlines on Ukraine. We've been focused on whether he might go to Turkey to talk about Ukraine-Russia with Ukraine-Russia today. That doesn't seem as if it's happening. But he mentioned Friday, so maybe there's something we still watch for on that front.
He also implied that Putin's not there because he's not there.
Yeah,
I can't quite work out how the choreography on that one works. But anyway, let's get back to the markets and figure out exactly how the market's perceiving all of this. Valerie's here with the details.
Guy, we saw continued declines in oil, both Brent and WTI hitting session lows on those comments from Trump you guys were just discussing around this Iran deal. Seems to be dragging down on the oil price. This is Brent crude behind me, down some 3.1%. We also saw declines in the Bloomberg Dollar Spot Index. That was spurred seemingly around his comments about India wanting to drop all of their tariffs on U.S. We saw the Indian rupee jump slightly, the dollar soften slightly on the back of those comments. But that's the wrap from Trump there when it comes to the market reaction. I also want to keep an eye on what's going on in the long end of the Treasury curve. Those 30-year yields really flirting with 5% here, and this is something to keep our eye on. I think this is telling us that the market is really trading off of deficit concerns around this tax bill making its way through the House instead of tariff concerns. I think this is really a sea change in what's driving the market as we eye this tax bill making through the House. Even the House Speaker saying they want this bill done by Memorial Day, and that's less than 2 weeks away.
OK, taxes perhaps a focus in the United States then rather than tariffs. Valerie, thank you very much. Bloomberg's Valerie Teitel with her analysis of what we heard from President Trump, the market impact, and also other themes dominating market thinking right now. What does this mean for the global economy? Let's talk to Christian Keller, Head of Economics Research at Barclays. Christian, good morning. Now, you've been listening a little bit to what President Trump was saying there in Doha, just as we have. And one of the things that stood out and has caught the market's eye, oil prices were already weaker going into that press conference, and they weakened further as he talked about Iran. Now, we don't know where that one ends up, I suppose. But I guess with oil prices dropping so quickly, what kind of upside? Is it upside? If they drop this quickly, is it upside for the global economy?
For the global economy as a whole, given that there are more oil importers and exporters, typically that is upside because, energy goes into everything, and that typically is a good thing. I mean, we have been seeing so many deals. I almost feel like saying it's a dealflation, right? We're dealing with it. But oil lower is certainly positive news from an aggregate global perspective.
And from the US perspective, President Trump is quite animated about wanting lower oil prices. I'm just wondering, are you increasingly factoring lower oil prices into your modelling for the years ahead?
We do. I don't know necessarily for the years ahead, but, for us now, it looks like we're working with a lower oil price scenario than we had before. It is very important. I think for Trump it's very important because he does know, if we don't go to zero tariffs, that there will be some increases in CPI because of the tariffs. And, of course, if they can make it up by having lower oil prices, that then would, imply that headline doesn't go that much higher. And that's very important to keep the consumer happy. The consumer in the U.S. very much looks at the pump price and more than anywhere else in the world, really.
Talk to us a little bit about more of that. I mean, Anna, there was talking about the tax policy, perhaps, at least in the last 24 hours, getting a little bit more attention than the tariff policy. Just walk us through the math there. Donald Trump is making the argument that the tariff policy works if you get tax cuts on the other side domestically, which he has the GOP backing for. Does that math work? Do tax cuts equal, or even tax cut extensions, equal or offset the impact of tariffs?
Many things here. I mean, first of all, the tax cut extensions, I think everyone has baked them in. But they cost around $4 trillion or so over a decade. Now, it depends on where we land on the tariffs. If we now hear that possibly there could be a zero tariff with India, you wonder where are we going? Are they really saying we have a minimum, let's say, universal tariff of 10% in order to generate revenue?
Yeah.
Or, are we, walking back on all of this? The less tariffs we have, the less income. I think the market now is mostly focused whether we get additional tax cuts in the U.S. beyond the extension of the TCJA. And that, in a way, I think, is one reason why also yields are moving a bit up, because it does look as if there's a lot of ambition to cutting tax beyond that. And that would imply, you live in the U.S. with deficits of 6-7%, with a slowing economy possibly higher.
Yeah.
A debt ratio that continues to go up. And markets are wondering, are there any efforts in a way to deal with that dynamic?
So when it comes to the real economy, we talked about kind of the tariff versus tax cut argument that the Trump administration is making. Let's talk about a different argument that they're making when faced with that question of yields ticking higher. A Trump official would make that argument that if yields tick higher, it's offset by the lower gasoline prices that you're seeing, the drop in oil prices for the end consumer, even if pricing may get a little bit more expensive. Or is that math that offsets each other?
You have the consumer that consumes and it looks at prices. So if CPI is lower, that helps. You also have a consumer, however, who wants to take mortgages and buy a house, etc. And there, the 30-year rate that your colleague just referred to is very important. So I think, will it offset? It really depends. I mean,
what are they more sensitive to, though? Is it that mortgage rate, or is it that oil price, the gasoline price, the price at the pump?
Ultimately, 70% of U.S. GDP is private consumption, and private consumption is very dependent on a lot of it is on energy. Longer term, however, if you look at the housing market, if you have a higher 30-year rate permanently, and you have these mortgages that don't allow really for people to refinance or finance new housing, that will have an impact as well. You have to then say really where's the level, where do we end up to make up whether one offsets the other, but there's certainly walking in different directions.
Do you see a cheaper dollar going forward?
The dollar is a good question. There have been so many gyrations. I think in the short term, everyone was always caught on the wrong foot, going into the year thinking the dollar is going to be strong, tariffs add to dollar strength, then thinking, oh my God, the U.S. is so radical that there was a shift out of the dollar globally. By the time everyone got short the dollar, we got the China deal. Now everyone again got wrong-footed, was short the dollar. That's why you saw the shift back. We think in the longer term, there is now a view, I think, among international investors that one may want to be more diversified, diversified out of the U.S. dollar. And I think longer term, that doesn't bode well for continued dollar strength.
Why is that? Is it because they don't trust the United States? Is it because they're worried about deficits? Or is it ultimately that the global economy needs to rebalance? And the easiest way to do that, you could argue, is not via tariffs, it's by the dollar. If you reduce the value of the dollar, you change the whole dynamic. Is the dollar the easiest way to get to the kind of balanced economy that Donald Trump and many within the U.S. administration are ultimately looking for?
There's some debate of that, how much the strong dollar really led to what, the administration, has criticized a lot, the downturn of the manufacturing sector, etc. I mean, the US
is consuming a lot, and one of the reasons it can do that is because of the strong dollar. If you want to reduce consumption, one of the ways you do that is just by changing the dollar dynamic.
The exchange rates are important, and if you look at the dollar over like a 40-year horizon, we've never seen dollar strength in real effective terms. The way we like to look at it. The only time you saw peaks like this was in '85 and in 2001 or so, and we are at a peak now. You would think that is likely now to go in more likely to go in the other direction than to go for further strength.
So the logical thing to do is the administration is denying it, but is the logical thing to basically say to your trading partners, we would like a weaker dollar?
Yes, that would be. I would doubt, however, as I said, that the U.S. deficits in trade are really driven that much by the dollar. There's a saving investment balance, and I think the U.S. is not addressing that one.
Yeah.
And taking us back to trade then, Christian, I was just looking at lines, the EU's Maros Sefcovic, who of course manages the trade brief, talking about how he's going to meet with Howard Lutnick, and he's had another call with Lutnick yesterday. We've had our expectations managed about how slowly we get to a Europe deal on trade. How much does it matter to Europe? What's the sort of downside for the European economy that you're pricing in if we don't see a deal done on trade?
The downside is quite large, and Europe, in a way, seems to be at the very end of the queue. They keep emphasizing this. I think the Europeans also don't want to rattle the boat before the NATO summit on the 24th, 25th of June. It's very important for the Europeans, because that whole security issue is very, very key to them, and I don't think they want to upset Trump before that. But then afterwards, there's not a lot of time between the 25th and the 9th of July.
And the 9th of July is when the time expires.
The moratorium ends. That can always be extended. But the rhetoric out of Washington that the Europeans are, I think as Trump put it, in many ways more nasty than the Chinese, all that, I think, indicates that the negotiations will be difficult, but they're important. The European economy has 20% of its GDP are exports, many of them to the US. It's an open economy. And, the sectoral tariffs on autos hurt it a lot. We'll see what's coming on pharma, very important for the Europeans. So they have a strong interest in really dealing with this, much more, for example, than the UK economy, which has a trade deficit with the US, actually.
Talk about the labor market for a moment. There's been a lot of questions of that, of when a trade war, the fear of just an absolute trade stoppage or blockage, similar to what we saw in COVID, for example, would show up in the labor market. We haven't seen businesses reacting that way. In fact, we're likely seeing the opposite. In Donald Trump's press conference just moments ago, he actually made the comment that some of these deals that are coming from the Middle East would include 3 or 4 million jobs creation in the process. At what point does the labor market break down?
The labor market without a recession, and we took out our recession for the US, is actually going to continue to remain quite robust. And I think the interesting part of the US labor market is now the supply side. We have no longer seen the kind of inflows that we've seen over years, which were very high. So with no more fresh inflows, and you keep, having 150,000 jobs a month or so, which we think will slow, but you keep having positive numbers, it is unlikely that the unemployment rate will go up much. And that's a very interesting perspective now for the US, that they may have a slowdown without that much of an unemployment rate going up.
We got a technical recession, a technical contraction in the GDP, though, in the last quarter. If we were to hypothetically get that again, does it matter that the U.S. would be hitting a technical recession if we don't see the layoffs to match it?
I know, frankly, these technical recessions, I mean, the first quarter in particular that you mentioned, where you had a 40% increase in exports, amazing, huge front running of exports that then automatically, mechanically drives down your GDP. We know that this will revert in the second quarter, so you get a better number in the second quarter. The technical definition of a recession, if there is no impact on the labor market, is really not that relevant. That's why we think the Fed will only cut once this year, probably towards the end of the year.
Why would it cut? If you've got a labour market that looks pretty strong and you've got an inflation picture that looks reasonably benign, why is,
well, you could argue
a reason for moving.
Yeah, you could argue that the economy is slowing, and you have a tightening of financial conditions if for example, the back end of the curve stays high. So that's why we have one cut.
Is inflation a bigger problem for the Fed now? Therefore, if the labour market's solid, is inflation the bigger problem?
It automatically becomes a bigger problem if you think underlying inflation is very dependent on the labour market.
Yep.
We now think the tariffs as we have them, which is 10% on the rest of the world, about 30% on China. We think you end up with still above 3% core PCE inflation by the end of the year. And that then we see coming down over 26. Now, if the labor market remains strong and there's a lot of demand, the fiscal deficit doesn't come down, who knows? Maybe inflation remains sticky above 3. Then the Fed may cut once or twice.
But they have to hike in that kind of environment.
It will try to avoid hiking as long as it can.
That would make life politically quite interesting. Christian, great to see you. Thanks very much indeed. Christian Keller, Head of Economics Research at Barclays. Coming up, President Trump has said he'd still travel to Turkey Friday if peace talks move forward. He just spoke in Doha. I think he's now on the way, I'm assuming in a beautiful helicopter, to the biggest US military base in the Middle East. You're looking at live pictures coming from there. He will speak there again shortly. That's next. This is Bloomberg.
Welcome back to the opening trade, 47 minutes into our European equity session. That maybe has slipped our attention a little bit as we've been listening to President Trump a lot this hour. But this is where we are on the European stock story, down by 0.4%. Weakness in energy stocks, weakness in basic resources, all of that really to do with a weaker oil price. We're down by 3% on the Brent price right now. And Chrissy, President Trump has been talking, as I mentioned, a lot this hour and hitting a number of themes.
Absolutely. Talking about serious negotiations with the likes of Iran on a nuclear deal. Reports of that had moved the market earlier. He spoke earlier this hour in Doha.
Iran has sort of agreed to the terms. They're not going to make, I call it in a friendly way, nuclear dust. We're not going to be making any nuclear dust in Iran. And we've been strong. I want them to succeed. I want them to end up being a great country. So we'll see what happens. But we're in very serious negotiations with Iran.
Horizon's Middle East and Africa anchor Jumana Bersetchi is on the ground and joins us to cover the presser and kind of the comments coming out of there. Jumana, walk us through what he said with Iran. And again, there were pieces of this kind of floated via various parts of the media earlier in the session. What's changed? What's the latest?
Yeah, so let me string it all together for you. So let's just recap exactly what President Trump said during that press conference in Doha a short while ago. He did say, I think we are getting close to doing a deal, but then he also said, you probably read the story that Iran has agreed to the terms. Here he's directly referencing an interview that was conducted by NBC overnight. An advisor, close advisor to the Supreme Leader, sat down, and the journalist specifically asked a question about what deal terms that Iran would be willing to accept. The first question was whether they would accept lower enrichment levels to civilian level type of enrichment. And the second was whether they would accept closer inspection from international monitoring agencies. And they said, the advisor said yes. So when Trump was giving this press conference, he referenced specifically some of the comments that were put out overnight in the last 24 hours. That's not to say that there hasn't been a lot of progress. We know that 4 rounds of talks have taken place between the U.S. and Iran. And it's becoming clearer now that Iran seemed to be open to the idea of no further enrichment from these levels. The whole aim of these discussions from the U.S.'s perspective is to ensure that Iran does not develop a nuclear weapon. And with 60% enrichment, they are months away from being able to develop what the IAEA estimates is about 4 to 5 nuclear weapons. So they want to stop it in their tracks. At the same time, this is something that President Trump has brought up as well in this GCC leader meeting yesterday in Riyadh. He said that it's also important, another condition is that they stop sponsoring, quote unquote, terrorism via proxies, the Iranian proxies in the region, a direct reference to Hamas, to Hezbollah, and to Houthis. So there is a two-dimensional approach going from the U.S. here. And whether or not Iran are going to be open to accepting those terms is a big question mark. But from what we can gather, especially from the comments now that Trump made at the press conference, it seems that they are moving in the right direction. But at the same time, there are people within the Trump administration who would like to see the U.S. go further. The Israeli prime minister would have preferred for full dismantlement of the nuclear program. If they only come up with a lower level enrichment, is that going to be enough to satisfy the hawks in the Trump administration?
Okay. Well, oil prices are certainly responding to some of these headlines, aren't they, Jumana? And we see that down by around 3% on Brent right now. So we've heard a lot about geopolitics. We've heard a lot about attempts to find peace in various different theatres in the Middle East and wider. What about deals? He was surrounded, President Trump was surrounded in that press conference we heard in the last 50 minutes by important U.S. business leaders from the aviation sector in particular. What have we heard on deals?
Yeah, big flashy numbers. So we had the 600 billion figure from Saudi Arabia with a pledge to increase that to $1.2 trillion worth of economic agreement, quote unquote, with Qatar. That is not the same as deals. The real number for deals in Qatar is something closer to about 254 billion. And you spoke about this earlier on the show, that big record-breaking Boeing order that came through from Qatar Airways, valued per the White House at around $96 billion. That was a major breakthrough, both for Qatar Airways and for Boeing, the U.S. manufacturer. But then also we saw more deals being inked on the defense front, around $38 billion worth, a $1 billion deal with Raytheon. And as we speak, President Trump now is making his way to the military base, the Al Udeid Air Base, about 45 minutes away from Doha. It is the largest U.S. military base in the Middle East. So defense, obviously still an important focus of some of these agreements that are being inked in the Middle East. In a couple of hours, he makes his way over here to Abu Dhabi, where we're expecting more of these types of announcements.
Jumana, thank you very much. Horizon's Middle East and Africa anchor Jumana Bersetchi waiting for President Trump to arrive in Abu Dhabi a little later today.
Absolutely. So, as we saw a little bit earlier on, flanking the President of the United States, the CEOs of Boeing and GE Aerospace, Kelly Ortberg and Larry Culp, two important figures on this deal as we see this huge order coming out of Qatar Airways, 210 wide bodies. It's a huge moment for Boeing, and let's get some analysis on how significant it is with Bloomberg's Benedict Campbell, who leads our global aviation coverage. Benny, just talk to us about how important this deal is. We knew that the CEO of Qatar was going to place a big order. We didn't know it was going to be this big. Obviously, politics and diplomacy interacting with the business story. How important is this for Boeing?
Well, it's obviously a huge deal, and Trump likes to tout these big numbers. At one point, he said it was worth $200 billion. That's obviously not quite where we're at, but it's nevertheless a big deal. The White House now saying it's $96 billion. 130 787 Dreamliners, 30 777Xs, and then another 50 options that they might turn into firm orders. So all told, 210 aircraft, that would be, as you said, the biggest order yet in terms of value. There have been bigger in terms of numbers of planes ordered, but in terms of sort of wide-body jets, and those are the big, long-range, expensive planes. So for Boeing, that's a big deal. It's important to win an anchor investor, as it were, with Qatar. This is obviously a very successful, large sort of halo airline. They had a similar deal about 2 years ago in Dubai at the Dubai Air Show, where Emirates placed another big order for the 777. So this is an important win for Boeing to cement its dominance in the wide-body market, where they still have an edge. If you look at the duopoly between Airbus and Boeing, Airbus has very much pulled ahead on the narrow bodies, on the A320 versus the 737. We've obviously heard a lot about the issues on the 737, but in wide bodies, that's where Boeing still has an edge. So this was very important for them to bring this one home.
Benny, walk us through just how difficult or easy it is for Boeing to actually fulfill these orders.
Well, these are obviously huge numbers, and it will stretch well into the next decade to get these fulfilled. Right now, the monthly cadence of the 787 is about 6 units. They obviously want to raise that, but they have to get all their ducks in a row, as it were, at the factories, and that's going to be tough. Kelly Ortberg, the CEO, he has said he's still worried about the supply chain. It has to purr perfectly. It has to work. Any disruptions, through tariffs or other things, that would obviously be a problem. So getting the orders is not easy, but that's one thing. Actually getting these orders out of the door, that's going to be the tougher part. And that's something they're working on very hard. Ortberg has managed to improve the overall factory output, the quality, the speed, but he'll have to keep that going if he actually wants to get off this huge backlog that stretches, as I said, into next decade.
Let's see how that all unfolds and actually how Boeing shares react at the U.S. Open. We thank you so much, Benny Campbell there, our global aviation editorial lead, joining us out of Berlin, Anna.
So we are waiting to hear once again from President Trump. He's going to be speaking again in Qatar. We are also getting live images of President Macron speaking at a JPMorgan event in Paris. The French president saying, he's speaking at the Choose France summit. He's saying there's no longer a level playing field between the EU and elsewhere. We will later on from that event be bringing you a conversation with Jamie Dimon, Chairman and CEO of JPMorgan Chase. This is Bloomberg.